Dollar cost averaging. That's how I turn bad investments into profitable ones. In this video, we're going to go over 2 examples of how I use dollar cost averaging to go from red to green.
I just want all of the money.
Example 1. I bought Lyft during the IPO time. I didn't want to, but I thought it would make a great video for the vlog. Oh shit, my order filled. I kind of wish it didn't fill, to be honest with you. I had to do it. Do it for the vlog. I'd originally purchased my 100 shares of Lyft at a cost basis of $81 a share. It took nearly a year, but I kept buying into Lyft stock and built my position to 1,900 shares with an average cost basis of $43 a share. This week, I had actually sold it prior to earnings at $53 a share, netting quite a bit of a profit on Lyft stock. This number does not include the profit I've been making from selling covered calls every month along the way. Example 2, Lunkin Coffee. Now, as another commenter had pointed out, it's actually pronounced Luckin Coffee. There's no N. He called me a maniac. I think Lunkin sounds better, and I recommend that they change their name. It only took 2 weeks to make this bad trade profitable, so let's go into a little bit more detail about this on the webcam. So I'm gonna do this very quick. I wanna talk a little bit about my Lunkin Coffee trades. So this is a Lunkin Coffee, and as you guys can tell, this is a few weeks back, was my first trade. I bought it at $39.38 a share. 300 shares. I sold several rounds of call options, so I made about 155, 155, 155. Lunkin Coffee took a dump, as you guys recall, from the coronavirus scare. I picked up another 200 shares at $27.55, and then those call options that I sold at the beginning of the week of the 28th, I ended up banking money. Obviously, they expired worthless. So I sold another round of covered calls at this strike price later on in the week, around 40, made that much in those covered calls. So later on in the week, the 200 shares that I picked up here, I sold off for $36.92. I purchased those at $27.55. I lost money by covering the 2 covered calls, but only about like $5 and change a share. I made almost $10 a share on these. So overall, I profited about $1,000 on the 200 shares. And then you guys can kind of see that I covered those additional covered calls, and I sold off Lunkin Coffee here for $36,515. Here's one other trade on Lunkin Coffee. It's very small, 100 shares. It made like $15 or something. Don't worry about this one. But this is kind of the bulk I want you guys to see. It's the power of dollar cost averaging, buying the dip, and then overall selling everything at a lower cost as a result of having a lower cost basis, resulting in a profit. Yeah, hopefully that made sense. It's not going to make sense maybe by me talking about it. Just take a quick look at it again, and you'll kind of see how I profited here. Example number 3, like a donkey, I bought the Casper IPO this past week. Donkey. And I'm probably gonna have to use dollar cost averaging to get out of this mess. I'll let you guys know how it goes. This approach that I take does require good capital management. You don't necessarily need a lot of money, but you need to carefully manage the money that you have. This is my own variation of the martingale strategy, which is a probabilistic model used in stock market trading as well as gambling. And in my case, both at the same time. I just want all